Agnico reported a beat on the top and bottom line after the bell yesterday. Congratulations on that, Mr. Al-Joundi. Business is good then.
Business is very good, and it's nice to be on the show, Tyler.
Well, it's great to be here. Where are you seeing the greatest demand? Is it in gold or other minerals or both or all?
All. So gold is both a commodity and a currency. On the commodity side, we are seeing very strong markets, and we expect to see strong markets. The one thing I would say, Tyler, about commodities, especially important critical metals, is it's not just what you're mining these days, it's where you're mining. And this whole issue of security of supply. The West, we've been accustomed to security of supply of energy. I think the next 15 or 20 years, it is going to be equally important to secure metal supply. With regards to gold, which trades as both a commodity and a currency, it's benefiting from the commodity cycle, but it's also benefiting, frankly, from the currency cycle. And by that, I mean, it really is the only hard currency in the world that's not subject to the printing press.
Yeah, no, it has that role as a store of value. Your operations are across the globe: Canada, Australia, Finland, Mexico. I assume some in the United States or developing there in the U.S. and Colombia. So that speaks to that question of security of supply. I mean, if you're relying on Canada, Australia, Mexico, among others, Finland, you're looking at pretty secure supply chains that are not subject to threat or political instability, et cetera.
100%, Tyler. And look, we need to mine, the world needs to mine critical resources all over, in all countries. But our view at Agnico Eagle is we are regional players based on the best regions in the world. And we define the best regions as, of course, you have to have the geologic potential, but for multiple mines over multiple decades. And importantly, you have to have the political stability to be able to mine multiple mines for multiple decades. I know that sounds self-evident, but in our business, you're investing billions of dollars over decades. You know what? Once you build a mine, you can't move it.
Forgive me for not knowing this, and I ask this question out of genuine curiosity, because I don't know how the gold mining business works. But when you extract an ounce or 16 ounces or 100 ounces of gold, do you then refine it? And then who buys it from you, and at what price? Who are you selling to?
That's an excellent question, and I'm not sure that the average person knows that. And it gets to this point of it being a currency. So we and other miners, we mine gold, and we produce something called doré. And doré is really, it's a bar, kind of looks like gold, but it's not pure gold. It might be 50%, 70% gold, and then you'll have silver, copper, what else, other things in it. The important thing is we then send that to refineries, accredited refineries in different parts of the world. And interestingly, Tyler, once it's refined into LBMA, in other words, 99.9% gold, it effectively becomes a currency because we sell it basically to banks. We don't really sell it to retail. We don't sell it to jewelers. The banks buy it, and it really becomes part of it's more of a currency. It's fungible. One barrel of oil in Texas isn't the same price as of a barrel in Alberta, but an ounce of gold in Kazakhstan is worth exactly the same as an ounce of gold in Toronto, and that's one of the reasons it's a currency.